Hello and welcome to our web chat on Is Bitcoin a Bubble? We are joined by Haydn Jones, founder and MD of Blockchain Hub, who is well known to CTMfile viewers. We will be discussing various aspects of this problem, which is summed up by this interesting mind map of the whole complex situation. There have been many different bubbles over the centuries. My history master's favorite was the South Sea bubble in 1720. But what defines a bubble? What's involved in a bubble?
So a bubble is where we have some kind of asset where the price is being driven by exuberant behavior. I suppose the question is, whether that behavior, I suppose, looking back on it, was warranted or not warranted.
Because it's modern technology, in fact, conceptually, it's almost understandable for many people. Bitcoin, is it the price exploding because people don't understand it? Is that why we're having a bubble?
Well, Bitcoin's been around since 2009, so we have a price history which goes back 8 or so years. It's fair to say that Bitcoin's level of awareness has increased over the last 2 to 3 years. And we get people like Jamie Dimon who says that it's a fraud, which gives it an even bigger profile. So the extent to which its price can look like a bubble, I think to a certain extent is probably influenced by the level of interest that we're seeing in the marketplace at the moment.
But the real problem is, what's the utility of the asset that they're putting a price on? Isn't that the issue?
But I think to understand that, I think we've got to explore the word utility. So utility is all about usefulness. So obviously money has usefulness in that it can be spent, or it can be stored, or it can be saved. But money's primary purpose is a store of value. So Bitcoin is a store of value. And Bitcoin is interesting in that it's a store of value that can be securely transmitted anywhere in the world. It can persist in time securely, and then interestingly it displays these features of being able to have its own ledger. So it has a publicly available ledger, and people can securely send payments from one individual to another. So in terms of utility, it's a store of value, it's a ledger, and it's a payments infrastructure, which is slightly different to money in your wallet or having money in your bank, because you've still got to add on the ledger capability and the payments capability. So it has some interesting utility.
But this is created, okay, I realize it's a unique asset in many different ways, but we've had some enormous price rises. I mean, that graph you put in the top right-hand corner is really symptomatic of a bubble, isn't it?
Yeah, so if we look at the price history, so if we start in 2009, when the original Genesis block was mined, so that was January the 3rd, 2009, and it peaked then, it took about 2 years for the first Bitcoin transaction to be made against a recognizable real world asset. And then after that, people actually started paying very small amounts of dollars for it. It was about the end of 2013. The Bitcoin reached just over $1,000, and then after that, it was then deteriorating confidence because it was associated with Mt. Gox and Silk Road. We opened this year, 2017, at a price of around $800, and then it's been through 2 cycles. So it's been up to just under $3,000, and then fell back to about $2,800, and then we had a peak. It's about July, August time that took us up to about $4,800, and then dropped back down to where we are today, which is about $4,200. Now, what's very interesting is the market dynamics, and I think that there is some explanation for the price behavior if you actually explore the way this digital currency is traded on a day-to-day basis.
Yes, but this all sucks of being a bubble. Why isn't it a bubble?
Well, I'd argue that when a bubble inflates, or when an asset class and the price associated with an asset class increases way beyond its relative utility, that's usually because the people who are buying it aren't getting the information they need to assess whether it's fair value or not. The way Bitcoin is traded on a day-to-day basis, the information transmission mechanisms are very quick, and the markets respond incredibly quickly to changes in information. And you have this tension between the bulls and the bears who are taking long and short positions. So I think that the way the market operates, there's very, 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 very little time for it to get to a place where it's overinflated relative to what the market perceives of its real value. I think the challenges that we've seen in the past with the historical bubbles that we easily sort of reference as being comparable to Bitcoin is that the challenge there was it took a lot of time for the information to get back from these different countries. Okay, so the people that were buying this stuff, they had nothing to say, well, actually, this is, there's a problem in the market. This asset isn't worth as much as it is. So it didn't correct. I think what's interesting at the moment is that these markets correct very, very, very quickly. And the reason they correct so quickly, which is what you see in the volatility, is because they're receiving lots and lots of information 24 hours a day, 7 days a week.
So that means the price could plummet down to 1,000 just as quickly. It
could, yeah, it could. If there was if the United Nations came together and they said that cryptocurrencies were now banned globally, the price would plummet immediately because people would sell. They'd be looking to salvage any residual value in the asset.
What's your assessment then? Is there some level of bubble in the price today?
So there are a number of drivers in that price profile. And I think I do make the point there. I would say that there is probably some bubbleness in there, which, if we look at the traditional definition of that, relates to an over-expected anticipation of future value. But there is also different expectations of real future utility in terms of the efficiency that can be added to the economy. Because what we're talking about here is a technical innovation that takes friction out of commercial transactions.
Which is what you referred to in your last web chat with me. The excessive price can't go on, can it?
Well, there's only going to be 21 million of them. Okay, so if you think about the traditional sort of supply and demand, and actually we have a situation here where we've got limited supply, and if this asset proves itself to be as durable as it has proved itself to be over the last sort of 8 years in the future, I would expect the price to go up because there's going to be fewer and fewer of them, and it's a very good way to store value.
Really scary stuff, but there are some 70 billion has been invested in Bitcoin so far.
So the market capitalization of Bitcoin today stands at about $70 billion. The total market is in the region of about 130 or so billion. And I think I've said before that Bitcoin is one of only maybe 1,100 other or so currencies, each of which have got their own price history, the rationale for being a current traded price.
Summing up, would you invest or you observe Bitcoin?
I would observe the technology very, very closely. I mean, clearly I'm not regulated to give financial advice, so I can't suggest anybody make any investments to that end. But close scrutiny of the underlying technology would be hugely advantageous for people in terms of what is going on there in terms of this whole idea of being able to store value electronically, and what are the benefits that can then add to the economy more generally.
So Bitcoin, in your assessment, has got a long-term future?
The technology has got a long-term future, definitely. The Bitcoin protocol, spin-offs from the underlying technology, have got a long-term future.
But?
Time will tell. There may be other coins. I mean, Litecoin is a Bitcoin clone. I mean, Bitcoin has grown tremendously in popularity in terms of the way people have invested in it, but it may be superseded by something which is even more adventurous in terms of delivering a digital money experience.
There you have it, an adventurous money experience. Count me out. Thanks very much. Very interesting.
It's a pleasure as always, Jack.